In this video, we're talking about real-life examples of Fibonacci retracements and extensions. So extensions are a little bit different in the sense that it's not, point A to point B and where do you get in on a pullback. This is more like where can you go as an exit. Uses the same mathematics. You could pull it out of the same menu as the fib retracement. You could do the trend-based fib extension. So, for example, if you saw this move and you wondered, okay, well, where can we go? You could click on this, drag to that move, pull back. And then what happens is 100% of the move shows up, the high point of the move. You pull back and you're like, okay, I want to get involved. So where are some targets? Well, the 1.618 is by far the most common target. You can see that's exactly where we eventually ended up. But there's 2.618, 3.618, 4.23, etc. Now, this is just a simple guide as to where you could go later on down the road. I will say that fib extensions are hardly ever used for anything other than short-term day trading. Some people like them, but they aren't as widely followed. So the problem that you have with it is, how I had discussed previously, there's no real reason to believe that Fibonacci works other than people believe it works. So it's self-fulfilling prophecy. Because there are other types of Fibonacci. There's like Fibonacci cycles, Fibonacci time cycles, and probably 4 or 5 others off the top of my head that I could think of. But the reality is retracement's pretty much what people use. The extensions, like I said, they give you an idea of where you could go. So like on this 30-minute chart of Ethereum, if you miss this trade, well, you can see that we pulled back and we hit 1.61 before pulling back from there. This is, like I said, it's more or less a short-term trader's type of situation, because the reality is by the time you get all the way up here on an extension, on like a weekly chart, the fundamentals can change and the entire attitude of the market can clearly change from there. So take that for what it's worth, but you can see how it would have worked here quite nicely. You got involved perhaps on this pullback here on support, and you're looking at it, you're like, okay, well, I want to see it where can we go longer term? This is a half-an-hour chart, so it didn't take that long to get there. It was a handful of days, maybe about 2 weeks. Okay, so now that I have explained that, let's take a look at Fibonacci retracements. Like I said, is much more common. So the first thing that I see is, notice how we have rallied significantly in Bitcoin. This is the hourly chart all the way up to 42,000. So a lot of times what people will do is they'll see something like this and they'll say, I want to get involved, but I don't want to pay up. This is like going to the store. If a TV is selling for, say, 500 euros, or $500, whatever your local currency is, if it's suddenly $750, you don't want to run out and buy it. You want to buy it when it's 300. And that's essentially what you're doing here with a Fibonacci retracement. So if you're patient enough, you wait at the very least for the first Fibonacci retracement level. And there is the 23, but again, not as common. 38.2 is much more common. And you can see it did react to that. But the 50 is even more important, in the 61.8, of course, is the golden ratio that everybody likes as well. But the 50 is very popular. And you can see, and we'll talk about these later, but this is a double bottom. This means that we had approached an area, tried to break through it twice and failed. Well, it should not be a huge surprise that if they can hold it a couple of times, that we have rallied. It's pretty straightforward stuff there. So let's go ahead and clear that. And let's take a look at a little longer term chart. So this is a 4-hour chart. Now, this last leg up, that's not really the swing low. So you need to really kind of pull back here, and you can see that the 38.2 got hit. Not a surprise that we ran into a little bit of resistance here at the top. That's pretty common. But notice how we reacted pretty quickly. That's a sign that we are going to continue going higher. So in this case, longer term, maybe you do want to look at a Fibonacci extension. So on the daily chart, you can see, this is going to show us the same thing. We could even go further. And it doesn't take a whole lot to imagine that maybe the 23 held there. But let's get rid of that. And let's take a look at the monthly chart. And that's going to be straight up. But you could, at least in theory, based upon the fib extension, pull this out. And then if you go over here, this side of the chart, you can shrink the range by holding and dragging. So here's the thing. Assuming that this is going to be the high, in theory, your target is roughly 60,000 and then 95,000. The problem with that is there are so many different things that could come into play between now and then that it is really difficult to get, that kind of into the market to the point where you are simply going to hold on for that kind of move. It's very rare that you can do that. And with something as volatile as cryptocurrencies, probably not too wise. So again, that's why I would stick to extensions on short-term charts. So one way that a lot of people like using Fibonacci, and I have to concur with this one, is, you've got this move here. And again, there's the 50%, right? That we had just talked about. But what happens if you draw another from this pullback, this impulsive move? And what you'll get is a 61.8 at the same level. So that's what is known as a confluence. You have a couple of different fib levels that people are paying attention to. So there are some people that will look at this in the prism of this was the last impulsive leg higher. So I want to draw a fib there. There are the longer term ones that will look at it, and you can see they all kind of come together there. So that's exactly what you want to see. That gives you double confirmation. Again, there's no 100% guarantee, but it obviously gives you better odds because you have different groups of people looking at the same thing. And that's one of the best ways to trade, right? One thing that I would warn against is trying to use Fibonacci for counter trend moves. So for example, we fell here pretty hard, right? In Bitcoin, and then bounced significantly to the 50, but we didn't really go that far, and just the traders got wiped out. And, they tried that. And the reason being is the entire trend was starting to turn higher. So Fibonacci really only works with the trend. And to be honest with you, that's going to be true with most technical analysis. That's not solely a Fibonacci thing. Now, here on Ethereum, we can use short-term charts as well to look for trades. So let's go back to the fib retracement. You can see this is clearly a swing low. And we rallied here and pulled back. Well, here's another thing that you will want to look for. There's support there anyways. You can see that it had been supported multiple times. So with the 50% or 61.8% Fibonacci retracement level and that support level, it's kind of hard to think that it would have been a bad trade. Even on a 15-minute chart, you can see these things kind of come into play. So, again, this is confluence. We want as much confluence as possible. We want as many reasons to take a trade as humanly possible. There are other indicators that we will go through, and they will also pile onto this. But at the very least, you want to trade with the trend when you're using Fibonacci retracements and extensions, but that goes without saying. You want confluence. So in this case, I showed you an example of where we had two fibs, a 61.8 and a 50 tie together. But you could also use other indicators, and we'll talk about those later. And then, of course, you want to have a plan. You want to have a point where you say, that's it, I'm out. So let's talk about that. Here's a fib pullback to the 50% Fibonacci retracement level. A lot of fib-based traders would just put their stop loss behind the Fibonacci level underneath it, with the thought process of it either holds or it doesn't, right? Now, if you want to use your extensions, you could lay this out and recognize that the market is trying to get to 1861 based upon that. Again, though, a little less reliable than retracements. So the extension, I use that in short-term charts typically and to kind of complement other fib-based strategies. But when you look at this, you can see it was a nice setup, and you could have just put it on the other side of the fib. Some people will even take it, your stop loss, that is. Some people will take that protection order, and then once we break above and we come back and we test the next fib, they'll put it right here. They'll just move it up right along with it and kind of let the market, if we've broken above here, you might put it right here, kind of let the market tell you when it's time to get out. It takes a lot of patience. This was over the course of a couple of weeks. But really, the less you trade, the more money you're going to make anyways. That's generally the case. It's far too easy to overtrade, so I would warn against that as well. So pretty basic stuff. There's not a lot to it. You just have to make sure you're using swing highs and swing lows. Like I said, you just take the swing low in the case of an uptrend to the swing high and click it there. And you can see it'll lay it out for you. And remember, there are other levels, but I broke it down to the three that matter by far the most. Once you start talking about like the 23 and 78, it's a little esoteric. Typically what happens is, so when you get the 61.8 broken to the downside, not always, but typically that's a bad sign. So I'll pull up an hourly chart of Bitcoin, and you can see that we do kind of follow the trend all along. But if you are trying to short this market for whatever reason, there's absolutely no reason to be short of this market. But if you were on the other side of this trade, once you're past the 61.8, you're in trouble. Your first sign of problems were up here, and now you're trying to take off beyond that. So that's why I don't like the 78. Generally, if you're going to give up roughly 2/3 of the move, you're going to give up the entire move. That's just an observation thing. Statistically speaking, once you're beyond half the move and then 61.8, you're closer to the entry, meaning closer to losing money from the entry than you are making it. So it's time to cut your losses and move along. And there are enough Fibonacci traders out there that you will see them behave that way. So here's one here, and it looked really good for a while, but notice how, and over the longer term, it is against the trend, but notice how had you taken this, at first, the 50% held, and it looked like you're going to be okay, but the fact that you couldn't reach the highs again, that was your first sign of trouble. So in a way, Fibonacci, a failed Fibonacci return to the 100% in and of itself is a little bit of an early warning signal. I mean, there was still plenty of time to bail out with a profit on this. You know, this is an hourly chart, so you're talking 2 or 3 weeks, and then you just get blown out. So that's something worth paying attention to as well. You know, again, trading with the trend's really the only way to go. It makes your life so much easier. Even if that means you have to sit around and wait for the trade to set up. That's something that, unfortunately, a lot of traders don't have the ability to do. So in the next video, I'll take a look at an indicator known as the Bollinger Bands.